What if I told you that being poor is expensive, and the entire financial system is designed to extract maximum money from people who can least afford it? From banking fees to rent traps, we're about to expose 30 financial traps that wealthy people avoid but cost broke people thousands every year. This isn't about personal responsibility. This is about a rigged system. Let's follow the money.
Trap 1. Overdraft fees. Banks charging you for being broke. Your account has $5. A $6 coffee triggers a $35 overdraft fee. Now you're minus $36 for a coffee. Banks literally charge you money for not having money. This is a poverty tax disguised as a service. Banks make over $15 billion annually from overdraft fees, overwhelmingly from people living paycheck to paycheck. They reorder transactions from largest to smallest to maximize overdrafts, processing your $200 rent before your $3 coffee, so multiple small purchases all overdraft. Wealthy people never pay these fees because they maintain minimum balances or have overdraft protection. Poor people subsidize free banking for the rich. That free checking account isn't free. It's funded by people who can't afford the overdrafts. Trap 2. Check cashing services. Paying to access your own money. Payday loan places and check cashing services charge 2 to 10% just to cash your paycheck. You earn $500, you pay $25 to $50 just to access your own money. Banks do this for free if you have an account, but many poor people can't maintain minimum balances or got blacklisted from banking. This creates a trapped cycle. Can't afford bank account fees, must use check cashing, lose money on fees, can't save to afford bank account. Repeat forever. Wealthy people never pay to access their money, they get paid interest for having money. Poor people pay to touch their own wages. The system charges admission to your own earnings. This poverty tax costs low-income Americans billions annually for the privilege of accessing wages they earned. Trap 3. Rent-to-own furniture, paying 3 times the price. Can't afford a $500 TV? No problem. Just pay $50 a month for 24 months. You'll only pay $1,200 total for that $500 TV. Rent-to-own stores target people who can't afford upfront costs with predatory financing that triples the actual price. The effective interest rates are often 100 to 200% APR. Miss one payment, they repossess the furniture and keep all your payments. You paid $800 toward a $500 couch and end up with nothing. Wealthy people buy outright or use 0% financing offers. Poor people pay triple while risking repossession. That easy payments promise is a trap that makes escaping poverty harder because you're hemorrhaging money on inflated prices. You're not building equity, you're renting at massive markup with a repossession sword hanging over you. Trap 4. Convenience store markups, the neighborhood tax. No car, no nearby grocery store? Your options are convenience stores charging 2 to 3x grocery prices for the same items. A gallon of milk at Walmart, $3.50. At a corner store, $7. You're paying double because you lack transportation and access. This is the geography of poverty. Poor neighborhoods often lack full grocery stores, food deserts, and are served by convenience stores and gas stations with extreme markups. Wealthy people can drive to Costco and buy in bulk for discounts. Poor people walk to the corner store and pay premium prices for everything. That geographic pricing isn't an accident. It's market segmentation that extracts more from people with fewer options. You're not choosing convenience, you're trapped by lack of alternatives. Trap 5. Paying more for insurance despite higher risk. Lower credit score? Higher insurance premiums. Live in poor neighborhood? Higher rates. Can't pay annually? Monthly payment fees. Poor people pay more for the same coverage despite being the ones who most need affordable protection. Insurance companies charge more to people statistically less able to pay, creating a cycle where those most vulnerable to financial disaster pay the most for protection against it. Wealthy people get discounts for paying annually, bundling policies, and having good credit. Poor people get penalty pricing on top of already tight budgets. The system charges more to protect the people with less. That credit score determining your insurance rate is a poverty multiplier hiding behind actuarial risk. Trap 6. Payday loans, 400% interest rate debt traps. Need $300 to avoid eviction? Payday loan offers instant cash. Just pay back $375 in 2 weeks. That's 400% APR. Can't pay it back? Roll it over for another $75 fee. Suddenly that $300 costs you $600 plus in fees. Payday loans are designed so you can't escape. You borrow to cover one emergency, then can't repay because the fees eat your next paycheck, so you borrow again, the hamster wheel of debt. Wealthy people never touch payday loans. They have credit cards with reasonable rates or emergency savings. Poor people pay 20 to 30 times higher interest rates than wealthy people for access to short-term cash. This is legal loan sharking protected by law. That emergency loan is designed to create permanent financial emergency. Trap number 7. Not having $500 for emergencies costs you thousands. Car repair costs $500. You don't have it. Options: payday loan costs $650 total. Credit card at 25% APR costs $625 if paid over time. Skip the repair and lose your job because you can't get to work costs everything. Not having $500 costs you $500 plus. This is the expensive to be poor paradox. Wealthy people pay $500 cash, problem solved. Poor people pay $500 plus interest, fees, and opportunity costs. No emergency fund means every surprise becomes a financial crisis that costs more to solve. One unexpected expense can trigger a cascade: overdraft fees, late payment penalties, loss of transportation, loss of income. That missing $500 emergency fund costs thousands in fees, interest, and lost opportunities. Building wealth is impossible when you're constantly paying poverty tax on emergencies. Trap number 8. The lottery. Voluntary tax on hope. Poor people spend disproportionately more on lottery tickets. It's marketed as your only way out despite astronomical odds. The lottery is a tax on people bad at math, targeting those desperate for escape. Expected return on lottery tickets is around negative 50%. You lose half of every dollar spent. That's worse than any casino game. But it preys on hopelessness. When legitimate paths to wealth seem impossible, gambling feels like the only option. Wealthy people don't play the lottery. They invest with actual positive expected returns. Poor people fund state budgets and create millionaires while staying broke. That $20 a week on scratchers, that's $1,000 a year with negative 50% return instead of savings with positive growth. The lottery isn't entertainment, it's exploitation of desperation. Trap number 9. Buying in small quantities because you can't afford bulk. Toilet paper at Costco, 5 cents per roll. Single roll at convenience store, 40 cents per roll. Bulk is 8 times cheaper, but you need upfront money and storage space. Poor people pay more per unit for everything because they can't afford bulk. This extends to everything. Buying one dinner at a time costs more than meal prepping bulk ingredients. Single cigarettes cost more per cigarette than packs. Small quantities of anything cost significantly more per unit because they can only afford immediate small purchases. The poverty tax is built into pricing structure itself. Being able to afford more upfront means paying less per unit. You're penalized for not being able to afford the discount.
Trap number 10. Rent instead of mortgage. Paying someone else's investment. Rent, $1,500 a month. Building zero equity, zero ownership, money disappears forever. Mortgage, $1,500 a month. Building equity, eventual ownership, wealth accumulation. But you can't qualify for a mortgage because you don't have down payment or good enough credit. This is the ultimate trap. Proving you can afford $1,500 a month rent doesn't qualify you for a $1,200 a month mortgage because banks require down payment and credit score. So you pay more in rent than you'd pay owning, but you're locked out of ownership. Over 30 years, renting costs $540,000 with nothing to show. A mortgage costs similar, but you own a $300,000 plus asset. Wealthy people build generational wealth through real estate. Poor people fund landlords' generational wealth while building nothing. That monthly rent isn't a housing cost, it's paying someone else's mortgage while being denied your own. Trap number 11. Late payment fees compound your problems. Electric bill is $80. You're $3 short this month. Now it's $80 plus $35 late fee equals $115. Next month you're further behind because the late fee consumed money you needed for other bills. Late fees create cascading failure. Once you fall behind on one bill, the fees make it nearly impossible to catch up. You're not just paying the bill, you're paying penalties for being broke. Wealthy people auto-pay bills and never see late fees. Poor people play whack-a-mole with bills, getting hit with fees that make next month worse. That $35 late fee represents nearly an hour of minimum wage work just to pay a penalty for not having money. Late fees aren't incentives, they're poverty multipliers that make it harder to escape the cycle. Trap number 12. Predatory credit cards. 25 to 30% APR debt spiral. Can't qualify for good credit cards? Predatory cards offer approval but charge 25 to 30% APR with annual fees, monthly maintenance fees, and penalty fees. Your $500 limit costs you $125 a year in interest if you carry a balance, plus $75 to $120 in fees. These cards are designed to keep you in debt. Minimum payments barely cover interest. Wealthy people use credit cards with rewards and 0% promotional rates, paying full balance monthly. Poor people use subprime cards with extractive fees and crushing interest rates, unable to pay off balances. That approved credit card is an invitation to pay 30% interest on debt you can't escape while building credit too slowly to qualify for better terms. Credit cards for poor people are profit extraction machines disguised as financial tools. Trap number 13, transportation trap. No car, no job. No job, no car. Can't afford a car? Job options are limited to bus routes, which are sparse in many areas and time-consuming. This limits job opportunities to low-wage work close to public transit. But you need better income to afford a car to access better jobs. The catch-22, the reliable transportation needed for better-paying jobs, requires money you can't earn without reliable transportation. Wealthy people own reliable vehicles and access any job anywhere. Poor people spend hours on public transit or pay Uber prices to work minimum wage. Transportation costs eat 20 to 30% of income. That broken down car you can't afford to fix, it just costs you the better job you can't get to. Being immobile is expensive. Lost opportunities, lost time, lost income potential, all because you can't afford the transportation needed to escape poverty. Trap number 14, phone plans. Prepaid costs more than contracts. Can't pass credit check for contract phone? Prepaid plans cost more per month for less data and worse phones. A contract plan, $50 a month with new phone included. Prepaid, $60 to $80 a month. Bring your own device or pay full price up front. Wealthy people get subsidized phones and cheaper rates by qualifying for contracts. Poor people pay more for worse service because they can't pass credit checks. That prepaid plan costing $30 more monthly? That's $360 a year poverty tax for not having credit. Plus, you're buying phones at full price while contract customers get them free. You're paying premium prices for inferior service because you can't access the deals reserved for people with good credit. The communication tool you need to find work costs more because you're broke. Trap number 15, banking deserts. No access to basic financial services. Live in poor neighborhood? No bank branches nearby. You're forced to use check cashing, money orders, and predatory services. Banking deserts charge admission to basic financial services wealthy people get free. Without nearby banks, you pay for money orders to pay rent, $1 to $2 each, check cashing fees, 2 to 10%, and travel time and cost to access financial services. Wealthy neighborhoods have bank branches on every corner, offering free services and relationship managers. Poor neighborhoods have payday lenders and check cashing stores with extractive fees. That lack of bank branch isn't coincidence. Banks closed unprofitable locations, abandoning poor communities and creating service deserts that force reliance on predatory alternatives. You're paying fees because banks decided serving you wasn't profitable enough. Trap number 16, education traps. For-profit colleges and predatory student loans. Can't afford traditional college? For-profit schools offer easy admission and federal loans. You graduate with $50,000 debt and a degree that employers don't respect, earning minimum wage with massive debt payments. For-profit colleges target poor people with promises of better life, charge inflated tuition, provide substandard education, and leave students with crushing debt and no career advancement. Default rates are astronomical. Wealthy people attend traditional colleges with better aid packages and job placement, or skip college entirely because they have family connections for jobs. Poor people get trapped in credential inflation, needing degrees for basic jobs while being preyed on by institutions that profit from federally backed loans that can never be discharged. That opportunity was a debt trap disguised as education. Trap number 17, subscription services you can't remember to cancel. Free trial auto-converts to $9.99 per month. You forget to cancel. 6 months later, you've paid $60 for a service you're not using. Multiply this across multiple forgotten subscriptions, and you're hemorrhaging $30 to $50 per month. Subscription models are designed with dark patterns, easy to sign up, hard to cancel, auto-renewal defaults, and no reminder before charging.
Wealthy people have money to absorb forgotten subscriptions or assistants or apps that manage them. Poor people don't notice until money's gone. That $10 a month gym membership you haven't used in months is designed to be forgotten while continuing to charge. Subscription services profit from user forgetfulness. They count on you forgetting more than using. That's $360 per year poverty tax for lack of subscription management. Trap 18. Energy inefficiency. Your home costs more to heat and cool. Poor quality housing has terrible insulation, old windows, inefficient appliances. Your heating and cooling costs are 50 to 100% higher than newer, well-insulated homes. Landlords have no incentive to upgrade because you pay utilities. Wealthy people own energy-efficient homes or can demand upgrades. Poor people rent inefficient units and pay inflated utility bills with no control over efficiency improvements. That $200 a month summer electric bill in a poorly insulated apartment? Someone with newer construction pays $80 for the same comfort. You're paying poverty tax on basic comfort because your housing stock is aging and inefficient. Landlords pocket rent savings from cheap maintenance while you pay premium utilities. Being unable to afford better housing means paying more for worse comfort. Trap number 19. Healthcare without insurance. One emergency costs everything. No insurance? That emergency room visit for your child's broken arm? $2,500. Same visit with insurance, $150 copay. You're paying 15 times more for the same care because you can't afford insurance premiums. Hospitals charge uninsured patients the highest rates, the charge master prices that nobody with insurance actually pays. You're subsidizing insured patients' negotiated discounts. One medical emergency can trigger bankruptcy for uninsured poor people. Wealthy people have comprehensive insurance and negotiate or absorb costs. That $2,500 becomes $5,000 with collections fees, tanks your credit and traps you further. The healthcare system punishes you for being uninsured by charging maximum rates to people least able to pay. Being too poor to afford insurance means paying the highest prices for care. Trap number 20. Appliances and tools. Buying cheap means buying twice. Can only afford the $50 cheap shoes that wear out in 3 months? You'll buy 4 pairs per year for $200. The $150 quality boots last 3+ years. Same with appliances, tools, and furniture. Buying cheap because you can't afford quality means paying more long-term. This is the Boots theory of economic unfairness. Wealthy people buy quality once and save money. Poor people buy cheap repeatedly and pay more over time while never owning quality goods. That cheap vacuum cleaner breaking after 6 months. You'll buy 5 of them at $50 each over the years instead of one $200 quality vacuum that lasts a decade. You know quality is cheaper long-term, but you can't afford the upfront cost. Being poor means paying premium prices through repeated cheap purchases while never building ownership of quality goods. Trap number 21. Tax refund anticipation loans. Paying to access your own money faster. Tax refund of $2,000 coming in 2 to 3 weeks? Refund anticipation loan gives you $1,800 immediately. You just paid $200 for the privilege of accessing your own money slightly faster. That's 10% fee for a 2-week loan. These are marketed to poor people who can't wait for normal refund timelines, exploiting cash flow desperation. The effective APR is astronomical, often 50 to 150%. Wealthy people wait for refunds or don't need them because they're not depending on refunds for survival. Poor people pay hundreds to access their own tax refund early because they need it now for bills. That refund advance is another poverty tax, paying to get your own money faster because you're trapped in paycheck-to-paycheck desperation. The IRS could process refunds faster, but financial companies profit from the delay.
Trap 22. Minimum balance requirements. Fees for not having enough money. Your checking account requires $1,500 minimum balance to avoid $12 per month fee. You can't maintain $1,500 because you live paycheck to paycheck. You pay $144 a year for the privilege of having a bank account. This is banks charging you for being poor. Wealthy people maintain balances easily and get free banking plus interest. Poor people pay monthly fees for accounts that pay 0 interest. That's money hemorrhaging from already tight budgets. Some banks charge multiple fees: minimum balance, debit card, paper statement, etc. These stack to $200 to $300 a year in fees for basic banking services. You're paying banks to hold your money while wealthy customers get paid interest for the same service. Banks profit from poverty through fee extraction. Trap 23. Car title loans. Paying 300% APR or losing your transportation. Need $1,000? Car title loan offers it using your car as collateral. Repayment is $1,300 in 30 days. Can't pay? They repossess your car. You just lost your only transportation trying to keep it running. Title loans charge effective APRs of 250 to 300%. They target people who can't access any other credit. Default rates are high, and that's the design. They profit from fees and from repossessing and reselling cars. Losing your car means losing your job, creating total financial collapse. Wealthy people never risk their transportation for predatory loans because they have credit access or emergency funds. Poor people risk everything trying to solve short-term cash crises. That title loan is gambling your livelihood at 300% interest on a bet you probably can't win. Trap 24. Furniture and appliance rental. Paying forever, owning never. Can't afford to buy a couch? Rent it for $80 a month. You'll pay $960 a year for a $600 couch you don't own. Stop paying, they take it back, and you've built zero equity despite paying more than purchase price. Rental services target poor people who can't afford upfront costs with perpetual payments that never lead to ownership. You could buy the couch outright for less than 1 year's rental, but you don't have $600 upfront, so you pay more and own nothing. Wealthy people buy outright or finance at 0%. Poor people rent at massive markup forever. That rented furniture represents peak poverty trap, paying indefinitely for items you'll never own, unable to redirect that money to ownership because you're trapped in rental payments. Trap 25. Impulse buying as psychological escape. Living in constant financial stress creates psychological pressure that drives impulse purchases, small treats or retail therapy to feel better. That $30 impulse buy gives temporary relief but perpetuates the cycle. Poor people are accused of bad financial decisions for impulse buying, but the psychology of poverty creates intense stress that demands relief. Small purchases provide brief dopamine hits that make grinding poverty temporarily bearable. Wealthy people impulse buy too, but can absorb it. Poor people impulse buy necessities plus tiny luxury because denying yourself everything forever is psychologically unsustainable. That $20 wasted on fast food wasn't financial stupidity. It was a pressure release valve for someone living in constant deprivation. The judgment around poor people's spending ignores the psychological reality of poverty. Still, it's a trap, trading long-term stability for short-term relief. Trap 26. No credit history. Penalized for not having debt. Never had credit card or loan? You have no credit history. This means you can't qualify for good interest rates, rental housing, sometimes even jobs. You're penalized for not having debt history. The credit system punishes people for living within their means. To have good credit, you need history of borrowing and repaying, meaning you need debt to prove you can handle debt. Wealthy people build credit through authorized user status on parents' cards or small strategic debts paid easily. Poor people have no credit because they avoided debt, which means they get terrible rates when they need credit, which means they pay more, which keeps them poor. That lack of credit history costs you thousands in higher interest rates on the debt you eventually need. The system penalizes debt avoidance. Trap 27. Extended warranties. Insurance that never pays off. Buying a $300 TV? They offer $60 extended warranty. Statistics show extended warranties rarely pay out. Most products either fail within manufacturer warranty or last beyond extended warranty. You're buying insurance that mathematically doesn't pay. Extended warranties are profit machines. Retailers make more from warranties than from products. They're designed with exclusions that deny most claims. Wealthy people self-insure or have credit card purchase protection. Poor people buy extended warranties from fear of being unable to afford repairs, not realizing the warranty itself is unlikely to help. That $60 warranty on a $300 item, better used towards saving for replacement than buying coverage that probably won't pay. But poverty creates risk aversion that makes bad insurance bets seem necessary. Trap number 28. Working multiple jobs but no benefits. Can't find full-time work? You work 2 part-time jobs at 25 hours each. Neither provides benefits, no healthcare, no paid time off, no retirement. You work 50 hours weekly but have worse benefits than someone working 40 hours at one full-time job. Employers deliberately keep workers under full-time hours to avoid paying benefits, especially large retailers and restaurants. Poor people cobble together multiple part-time jobs, spend hours commuting between them, and get zero benefits despite working full-time hours total. Wealthy people have one full-time job with comprehensive benefits. Poor people work harder for less because the gig economy and part-time labor pool lets employers extract work without providing benefits.
Those two part-time jobs, you're working full-time hours for part-time compensation. Trap number 29, buying on credit at high interest because I need it now. You need a new work outfit or your refrigerator died. You buy on credit card at 25% APR because you have no other option. That $500 fridge costs you $650 paid over time. Everything you buy costs 25 to 30% more because you can't pay cash. Wealthy people pay cash or use 0% financing or rewards cards paid monthly. Poor people pay premium prices through interest on everything: furniture, appliances, clothes, car repairs. Your entire life costs 25+% more than wealthy people's lives because you're buying everything on high-interest credit. That financial emergency becomes permanent debt because you can't pay off the balance. You're trapped paying interest on past emergencies while new emergencies create new debt. The poverty spiral is interest charges on items wealthy people buy with cash.
Trap number 30. Not being able to save. The ultimate trap. Financial advice says pay yourself first and save 10%. When you're already choosing between rent and food, saving is impossible. Not having savings means every unexpected expense becomes a financial crisis requiring predatory lending. This is the ultimate trap. You need savings to avoid predatory costs, but you can't save because you're paying predatory costs. Every emergency without savings triggers fees, interest, and penalties that prevent future saving. Wealthy people's money makes money through compound interest. Poor people's lack of money costs money through compound fees and interest. That missing emergency fund isn't financial irresponsibility, it's mathematical impossibility when expenses exceed income. The system charges you for not having the savings it prevents you from building. You're trapped in extraction that makes escape increasingly impossible.
So, there you have it. 30 ways the financial system is designed to extract maximum money from people with the least. This isn't about making bad choices or being financially irresponsible. This is systemic design that makes being poor expensive and staying poor profitable for banks, lenders, landlords, and corporations. The poverty tax is real, it's massive, and it's rarely acknowledged because it's more comfortable to blame individual choices than examine systemic extraction. Every one of these traps could be eliminated or reduced through policy, but they're profitable for powerful interests. Which of these traps are you stuck in? Which one made you angriest? Drop your experience in the comments. And if this video opened your eyes to how expensive poverty actually is, hit that like button and subscribe, because understanding the game is the first step to changing it. The system isn't broken. It's working exactly as designed. And it's designed to keep you broke.